Yes, yes. Welcome back. Welcome back, everyone, to watching Ashram Hours. But most importantly, welcome back, Sid, to the mainland, the motherland. You've returned from your Eastern adventure.
Yes, I have. It's nice to be back in Texas.
And
Good
I hear
food.
the food. Yeah, I hear
Air
the food was
conditioning
good.
that works. The Zens, they just taste better in your home neighborhood. And there's, I don't know, that American formula. There's something weird about European nicotine pouches. Maybe it's an acquired taste.
Yeah. I've been watching on Twitter. Mert posted something about Zins the other day, how like constricting arteries and blood flow, and he had some issue. He had to go to the doctor, and the doctor's like, "I'm glad you came in. That could have killed you." Like, so Zins, not as healthy as they sound.
That thing was it was trending for a second on the X algorithm. Like Solana founder has near fatal experience. It was a shit post.
Do you think so?
It was like a long wind up to a punchline, which was just an insider joke for Solana. The whole thing was a lie. He's fine. He didn't have a brush with death.
Good. Well, then I'm going to hit my vape, which I'm back to not quitting, but then soon quitting again.
Do it.
Didn't sound more fun.
You know, they it's not so much that they're fun, it's that they're subtle, they're sneaky. You can, have them at the dinner table or the card table.
Yeah.
Nobody knows.
All I remember is, I've had two, and you gave them both to me at my house a couple weeks ago, or a month ago now.
And it's like the first time having a cigarette, which is like you turn green in the face, you get all lightheaded, you're going to throw up.
Yeah, I was monitoring it closely. I was like, as soon as I feel that, I'm just like, nope.
That's always the advice. Yeah, don't be a hero. The second you feel the queasiness, pull the ripcord, because it's already too late.
Yeah. Nicking out is not fun. For anyone who hasn't done it, don't. We are here mostly today with some dev updates. And as you pointed out, dev does not move week to week always. There's, we got the great logbook that our mods are working with our team and putting together each week. And that's been sharing some of the more monotonous updates, like debugged WebSocket 321. Like, I don't know any of this shit, but I think there's a few more juicy and interesting updates that we can talk about today that I've been looking forward to, and I know you have. So we'll get into all that today, and then I'd like to rehash a few interesting points on the Zen Loans product. It's still a very little known outcome that can spawn from something like Samsara, and I think that's going to be a super powerful play for the Nirvana ecosystem. So we'll touch on that. And if there's anyone in the Discord who's watching live and you have some interesting questions for us, happy to take them. I've got you up here on the right. And let's get into it. What's been going on in the dev kitchen?
Yeah, let's bring up the screen of the demo. Well, that's coming up. What we're working on is the last few bits of UX and UI that are needed to really make this a best-in-class kind of product for reporting. That's something that matters a lot to me, which is at the end of the year asking yourself, what were the trades that I did? What's the tax burden? What's my cost basis? What have I done? It's often an afterthought in DeFi applications to really drive home, these are all of the operations that you've done. This is when they happened, what it means, how it affects your P&L. And I want this product to be just a leader in the ability to generate reports, go through the history of every operation you've done. We're also working on the homepage. Sorry, just trying to get the demo screen up right now.
Reports in DeFi, sorry, I was just going to fill some space there, but the reports in DeFi are a sorely missed thing. As someone who traded primarily on centralized exchanges for the first 5 years in crypto, and then pivoted mostly to DeFi in 2022 and beyond, I got to say taxes are much more challenging. And frankly, they're just more costly because you have to pay an accountant or work with an accountant for many more hours. So if you're telling me that you're going to create a button I can click and get a CSV or something of the like, that excites me. It's literal dollar back in my pocket from hours from my accountant.
Yeah, that's how it ought to be. That's how brokerages typically are.
Yeah.
I got to think part of the reason is that when people build these things, they're thinking, well, you've got a block explorer. You can see all the operations your wallet has done. You figure it out. It's not so easy disentangling that bowl of spaghetti. And I think that it's really important that when putting together these kinds of applications that you bring with yourself the sensibilities that any traditional financial product would have, which is that if anybody sneezes, that is recorded and logged. If you do anything, sign in, touch something, move money around, repay a debt, all of that is recorded, and how it affects your shifting equity levels over time.
Yeah. Well, like an Etherscan baked into an app. I mean, you can get CSV files on wallets, but anyone who's traded on chain and used on chain and moved in and out of LPs and all that, that it's the cohesion between those wallets and smart contracts and all that. That's where the nightmare builds up, and for those of you who sit down for your first time ever with a tax accountant and they say like, oh, you've got like 3.5 ETH. Like, what's the cost basis on that? And you're just like, I couldn't tell you. And no one could because it's moved through 50 wallets, 20 protocols over 10 years. Like, so yeah, anything that can smooth and ease and reduce friction on that path is a super valuable development.
Yeah.
It should be a standard. And I think someday it will be. We'll be like, but I remember back in the day when, all these DeFi protocols were just kind of out in the dark with regards to reporting. It's a lifesaver for those of us like me who pay their taxes.
Especially considering that one of the key value props of this product is tax advantage strategies, tax minimization strategies.
Mm-hmm.
That one of the interesting things about Samsara and Nirvana, for that matter, is that you receive a line of credit which is draftable from the liquidity in the market. In the same gesture as you're making a market on Samsara, contributing to the liquidity, depositing into this marketplace, you are also given a line of credit based on that deposit, meaning that if you were to deposit, say, a bunch of Bonk tokens or Sol tokens into a Samsara marketplace, by virtue of making that deposit, you get credit in the form of the Bonk that was deposited, or the Sol, or the JLP, or the wrapped Bitcoin, or what have you. What's cool about that line of credit is twofold. One of them is, hey, you have leverage. You can pull that money out and sell it to buy something else. But more pertinent to this conversation, when you pull that money out, it is debt. When you borrow Sol out of a Samsara marketplace, that is debt that you're taking on. And debt is famously, in all jurisdictions that I can think of, not income. And so when you're borrowing Bitcoin or Bonk out of these markets, when you're borrowing any asset out of these markets, and you go liquidate that asset for good old USDC or anything for that matter, that's not a taxable event because you're not selling something that is income. You're not incurring capital gains. It's a very common pattern in capital markets to draft a form of income. I guess you could call it income in air quotes, but it's based off of borrowing. It's based off of debt. So it's not actually actualizing capital gains or anything like that. And what this means for people using this is that they can borrow without selling their principal. They can hold on to their principal Sol or again, whenever I say one of these tokens, any asset that Samsara supports, deposit that and then have a line of credit that you can borrow right off the top of it, and then go take your income that way. This is the billionaire strategy, to not pay taxes, and it's not
Buy,
illegal.
borrow, die.
Yeah. This is a perfectly reasonable tax code. It's one that many jurisdictions adopt, which is just debt is not income. So if you happen to have a lot of Amazon stock, you just post that as collateral with a personal banker. You borrow a line of credit off of that. Maybe it's 50% LTV. I don't know. And you pay for your lifestyle using that debt that you've taken on. This system makes that available for all assets. So you can, if you happen to have a bunch of SOL, maybe you got it at a very low cost basis and you don't want to sell it, you plop it into this system and you can borrow some SOL from the liquidity of this marketplace and then go and sell that and then fund your grocery bill or whatever. Yeah. Without incurring capital gains. Your initial principal stays in there as liquidity.
Yeah, and minor granular correction on that. Once borrowed, and you sell that asset, that is a taxable event, but it's not based on your initial cost basis. It's based on your cost basis at time of borrow. Just to be clear, I've been consulting heavily with tax professionals, my accountant included, couple others from the States, one of whom has actually written tax code, and he just confirmed that. He said, yeah, like at the time of borrow, there's a new cost basis on that debt. If that shoots up 10x and then you sell it, yeah, you're going to pay tax on that. But at the time of borrow, if it's a fairly one and then two, you still report that moment, but it's minuscule. So minor detail, but like finally, this kind of strategy becomes available to anybody, and there's no major blockers to prevent people from accessing such a strategy. And here's an interesting thing, and I'd love to run it, like we haven't really talked about it, but say I buy ZenSol at 1, the floor is 0.5, and I borrow 0.5. So my LTV is 50%. And over time, people start to realize, wow, this is an interesting way to access capital against my SOL without having to sell it. And so they all join in. And over time, usage and demand drive the floor up, as you can see on this chart, the purple floor ticking up. And eventually that floor that was 0.5 goes to say 3. Now my initial cost basis was 1. That was the market price I bought in at. But now the floor is 3. I can borrow 300% LTV in that scenario. Is that correct?
That is correct. Well, yeah.
Roughly, like
your credit is definitely expanding because the value of your collateral is expanding.
Yeah, and so
it's the value of your collateral, as you said, is what 0.0049 SOL back then, and as you said, now it's up here. That's about a 10x increase, more than 10x. So you have 10 times as much credit a month later as you did earlier. Is that the point you were making?
Exactly. And the only issue with this, Thomas, Sid, is that I am trying to explain this to people in a way that sounds real. And I say to them, hey, there's a platform we're building and it offers self-bootstrapping lending liquidity for any token on any chain as we scale out. And these are self-repaying loans in essence, because they have a yield-bearing collateral underneath and they don't charge a long-term interest rate. And there's no liquidation risk. And they stop me and they say, okay, well, that's a scam. That sounds like bullshit. Like that's the energy. Like people are like, okay, you'll have to explain that to me again. Now, when I try to add to that, oh, and your LTV on this loan could exceed 100%. They're like, oh, get out of here. That's my issue right now. And I say that tongue in cheek because it just gets better when you start to factor in the growth potential of these Zen assets themselves. The Zen Loans Vault we've talked a lot about building is one where the yield of that underlying collateral, which the holder, still technically owns, but it's held in escrow, that generates yield. And the way we've described the design of the Zen Loans Vault is such that yield will be used to essentially reinvest into more Zen loan or Zen tokens for that holder. And so, yeah, over time, and it all is dependent on sort of at which part of the curve you enter. Presumably those curves flatten out, deep into the future. But even then, your LTV is living in the normal region, 50, 60, 70. But there will be people who use this product and end up borrowing a self-repaying loan, non-liquidatable, at hundreds of percent LTV. And that's just an insane thought. It's a wild thing. It's wild to me. And it's not like I don't believe it. I believe it. I'm out here, very much involved with it. But it's like it's a head scratcher for every single person who's never heard of our product. It's like, what? How? And I think it's really spurring a lot of interesting conversations I'm having these days.
Just as you pointed out earlier, that the cost basis for debt is snapshotted at the time of origination, and that is technically true, which is the best kind of true. I would say semantically, it's not that LTV ever exceeds 100% with Samsara. Your LTV, your loan to value ratio, is still going to be under 100% at any point in time. And that's why it never, ever gets margin called. There's never a forced closeout. It's just that the value of the collateral has gone up. So,
okay, yeah. So I'm thinking about it wrong, and I'm really glad we're having this conversation publicly, because I've never said exceeding 100 LTV, because you're right, that's mathematically impossible, but it is the value of the collateral rising and then the LTV still living somewhere between 50 and 100, which has the effect of your initial cost basis borrow. You could be borrowing over 100% more than, initially aping in. It's interesting. That's a really good clarification point. Thank you for that.
Perhaps this is a helpful analogy. What does the floor represent in a samsara market? You could analogize this to what the NAV value is for these digital asset treasury companies that are popping up like mushrooms after a spring rain. A DAT company does basically a slight mutation of this common pattern, which is we're going to hold a bunch of some digital asset on our books. Sometimes these companies have multiple assets. Sometimes they're just SOL or just Bitcoin. Doesn't really matter. They hold a bunch of digital assets, and that's the NAV, the net asset value of this company. And then they have a share, which is tradable, and it is, fingers crossed, going to be a premium to NAV, which is to say that the market cap of their shares, their equity, is greater than the assets that they truly hold. Now, it's probably not going to work out so cleanly in practice with these DATs, but something very similar is going on here. The floor price is how much of this asset, I guess I'm looking at the SOL market, how much SOL is held in reserve as, let's call it, the minimum redemption value for this free floating asset up on top, which we're calling ZenSol. So at this point, ZenSol is worth 0.12 SOL. The floor is 0.05. This means that in the worst case, if everybody were to say, you know what, I'm out, I'm selling all my ZenSol, they will be able to redeem it for 0.05441 SOL. Worst case. Now, that's not true of DATs, because they might sell the assets that they hold. Maybe some of them in their operating agreements have rules about when they would sell or if they would ever sell. Maybe they're truly, when they will diamond hand this stuff till death. Who knows? But in this case, it actually is a true diamond hand, where the minimum value of the share price in this analogy, will be the floor price of the market. That minimum value at the floor price is where the credit comes from. Mm-hmm. And the same thing is going on here as with DATs, but it's much cleaner. It's much more decentralized. A DAT increases its NAV by issuing new stock or taking on debt. They all have their own flavors of doing this. Sometimes it's a mixture of both. But they're trying to sell something so they can get more money to buy more of a digital asset. Kind of the same thing is going on here, where if people are buying the, again, share in air quotes, and it really is a share. I don't need the air quotes. It's a share of this pool. If you're buying the share and it's going up, the algorithm has more money. And the algorithm is using the money to acquire a higher and higher floor price, a NAV for the market. It's like what a DAT does, but just algorithmic, decentralized, transparent, not based on committee meeting decisions like, should we issue more stock? Should we take on more debt? It's a grand simplification of this pattern. And to tie this back, when thinking about how your credit expands, it's kind of like being able to borrow based off of the shares of, say, MicroStrategy or another DAT company, based on the NAV, as if the NAV truly were a minimum price that the share would trade at.
An impenetrable NAV. Yeah.
Which there's not financial advice, but there is nothing about these DATs besides sentiment that keeps their share price, their equity, their market cap above the value of the NAV. Nothing stops the market from selling the shares beneath the NAV. But in this case, truly, nothing stops it from going beneath the NAV. And so what we're talking about with your credit expanding, it's because the NAV of the market, the floor value of the market, is expanding. Pretty neat.
Mm-hmm. Yeah.
And when you say it's self-repaying, that's because when you're holding this, you also receive a constant share of the revenue from the market. Anytime there's a fee from borrowing, exercising options, trading, anyway, those fees get shared out to the token holders. So you have passive income, which is you can use that to pay down your debt. Not only do you have passive income, but then also when the price appreciates and the floor price goes up, your line of credit also expands. It's kind of cool.
It's, well, a bit biased because I helped you design it and we talked at depth about it for about 75 hours this year. And but no, I think it's really cool. Very excited about it. And I've got a great question here that ties in with that from our friend Shake and Bake in the Discord, which I feel ready to answer. It says, what could the API look like in terms of percentage for Karma and Samsara, for example, for Sensol? And I'll start by saying that is a incredibly difficult thing to predict. And I'll share with you some of the variables at play. There are different buckets within the platform itself, within the protocol, namely the Karma. So anyone holding Zensol or starts earning, actually, maybe click on the earn page, you can see it. It's going to live tick upwards. If you have a connected wallet, you'll see it. And then it'll show you your percent share. And so that is your percent share. But the amount of the revenue that is directed to Karma or to the floor itself or to Prana stakers for that market, that value can change as well. And Prana will direct that value incrementally each week. As you guys may have known, if you've been paying attention in the Discord, these kinds of votes will happen each week that will move the protocol revenue between those three buckets. And so as far as your question is like, what could the APY look like for Karma? Here's the trickle down of how it'll depend. Primarily, it depends on volume. So you have your buys, your sells, each of those generating a fee, also governable. And then you have your borrows, also kicking off a one-time fee, governable. And then you have how much percentage of those fees goes to Karma, governable. And then you have the volume, of course, driving all of that. So after all those fees and the allocation that goes to that specific Karma bucket for that specific market, you just take that percentage of the volume. And as with all things in the market, I imagine that volume will ebb and flow. So more than anything, I'm really excited to see these 30-day trailing averages of what the volume looks like as we go through cycles and months and years and hot quarters and, boring quarters, like how these things net out. And then, of course, there's going to be some variety too, where as Prana stakers somebody could, like, I really want this to happen. I want somebody to create like a meme coin somewhere, maybe just call it like Floor, and then like we build a Samsara market on top of it, and then like the Prana vote just pushes all the fees into the Floor, and just try that out. Like a fun little experiment, some kind of meme baked on top of a meme design. In which case, who knows how that would impact the market. Or have one, maybe one where all the Prana decides like, we're going to take over this token and we're going to push all the fees over to Karma because we just want this thing to have such juicy yield. Like, I imagine something like that could work really cool on top of a staked SOL market where everyone is holding that token in general for yield. And then we make this market really attractive by all the Prana voters, like pushing the Karma yield also to it. So you could say like, hey, look, like Zen MSOL is yielding 16% a year or whatever. Like, so to your question, nobody knows. But those are the variables that'll be at play. And I think each token on Samsara is going to evolve slightly differently based on all of the governable things going on. But at the end of the day, volume drives it. And there was one last side question to this, which is like, what happens if all the Prana governors push all the revenue to themselves? And my response to that is like, yeah, sure, there's probably a line where they could do that, but if it makes the market uninteresting for the base holders, for the users of the market, it kind of shoots themselves in the foot. And nature will probably naturally heal away from such ridiculous things. It's the same question as like, why don't Bitcoin miners like pool together and then print extra Bitcoin? It's like, well, that would kind of devalue their whole business model, right? So there's a little bit of game theory here where I think it protects the protocol and all the holders from that kind of hostile stuff. But the interesting thing is each one of these assets is going to move independent of itself. We're not used to that, right? We have Nirvana, the ANA token, and the governance all just runs the whole thing, and there's one asset. But as soon as this thing goes live on mainnet, there's going to be tens and eventually hundreds and someday maybe thousands of different assets all moving in their own ticks every week with different governance. And it's going to be interesting. It's going to be fascinating to watch.
Yeah. Well, let me make a couple stray observations. With regards to the yield, it should be plenty. It should be more than what we're used to. And that's because Samsara and Nirvana unify yield both from borrowing and from market making. You get both. Usually when you have an asset, you kind of have to pick and choose. I'm going to either lend it and hope somebody borrows it and pays me interest, or I'm going to deploy it in a market and hope people are using it as liquidity to trade. You get both rolled into one with Samsara. It's the exact same asset of yours that gets put to work productively for both of those ingredients. It gets used both for trading liquidity and for borrowing liquidity. So you're double dipping when it comes to yield.
And maintaining that one singular upside, right, without the impermanent loss, which I like.
Yeah, no impermanent loss, which is to say divergence loss, which is to say you should have just held. That you making a market ended up earning you less money, less returns than just holding the darn thing would have. And when it comes to lending, you don't have to worry about bad debt or bankruptcy, which rarely happens with borrow lends, but when it does, and it does happen, it's quite catastrophic.
Yeah, we highlighted a bit of that in our article last week. And again, it's not about pointing fingers or stepping on other people's designs, but it just does happen. There are designs out there that are at risk of bad debt, and we've seen it before. Unfortunately, we'll see it again. It's just kind of the nature of cyclicality. I totally forgot about our leveling system as being one of the variables, which personally I love. It was designed in-house. Somebody else came up with it on our team, but basically those three buckets I described earlier make up a percentage of total revenue, platform being the other thing, because we got to keep the lights on. And as each market grows, it will level up in that pie, which makes up Karma stakers, Prana stakers, and Floor, the revenue going to those three. That whole pie, that whole bucket of the three just grows as the market increases in size. As trigger prices are hit, as demand drives in, the percentage of total revenue for that market that goes out to the various stakeholders increases. And much like the floor, it only goes in one direction. It'll go up when there's demand. It'll flatten out and stay where it is in absence of that. And so that's another fantastic feature that, starting at 50-50 ends up being 90-10. So 90% of the entire market's fee revenue going out to the various stakers. So going back to your question, Shake and Bake, I have no idea. But here are all the interesting pieces that are at play. And more than anything, I just can't wait to see it come to life. If you guys haven't yet, I'd suggest jumping on the Testnet, the Devnet, and playing around. I got on there again last week and started minting out various Testnet tokens and playing around with it.
The point is that it is fair and it's transparent and it's governed. Whatever the yield is going to be based off of what the fees are for each market. And who decides the fees? The token holders. So they can govern whether a high volatile meme token has 50 bips of swap fees, or if a highly liquid asset like Sol has 5 bips. It depends on the volume. It depends on what the fees are going to be.
Mm-hmm.
And then in any case, it's always distributed fairly, transparently, continuously. I've seen many self-described protocol pay their fees out with a bunch of backroom accounting. They'll collect up a bunch of the tokens that they've acquired as a company, and then they'll liquidate them somehow, and then pay it out, once a week to token holders. What a mess. And it
Very
requires
manual.
somebody running a trading desk to do this.
Mm-hmm.
Not so in this case. It's all automatic. It's all continuous. Anytime that there's a fee, anytime somebody trades or borrows or does anything else that causes a fee, it just gets paid out to everybody instantaneously. You really are just pulling from a drip feed continuously as a token holder. And all of the arithmetic that goes into how the fees get divided to this person or that in this way or the other, it's all transparent. There's no monkeying around with these equations. It's all derived through a simple governance process. And that leveling system that you talked about is an automated, transparent way to get to the place where I personally want all of these markets and Nirvana ecosystem projects to get to, which is they just are public goods. They are self-sustaining protocols that are fairly paying out to the people that use them. This leveling system is a way to get to that end goal, where as a market levels up, and leveling just means every time the floor rises. Every time the floor rises, the market is more mature. Once a market reaches maturity, it just doesn't make sense to me for some team to be collecting money on the back end. Who are they? It's now in the hands of other people. Other people are trading it, using it, contributing liquidity. The right thing to do is to just pay all that forward. There's no reason to keep funding things like marketing initiatives, funding things like partnerships or audits. Once these things hit maturity, at that point, the ship is out at sea, and the fees should just go out to the people. And I like a system that is transparent. I don't like it when companies that claim to be decentralized just make an announcement on Twitter that, okay, now we're doing buybacks with 50% of our revenue. Where did that decision come from? I don't know. Social pressure. It was arbitrary. It just doesn't smell right to me. And so what we have is a smooth, transparent system that gradually pays out bigger and bigger slices of the pie as the markets mature. And they all play by the same rule. It just seems better that way. So everybody knows the rules of the game. It's predictable. Yeah. There's no shadowy stuff happening.
Yeah, and that's actually something that's planned as part of the floor sizzle update that I know has been a burning question for a lot of people. And so a great segue there. Nirvana also getting its own leveling system, which has been a hot topic ever since I even really dove in here in January. Maybe talk to us a bit about that. What's going on behind the curtains? You're the guy coding it. How's it going?
Yeah. The same principle is at play with nirvana, where the end state of it is, I'm talking in state, like when this is fully decentralized and in the hands of the people, it's just paying out all of the revenue that it earns directly to the token holders. And it's investing that revenue into itself as a self-sustaining protocol. That's on the horizon. That's where it gets to, where it has the austerity of a Bitcoin, just kind of runs itself. One of the things as a stepping stone to that is to take a portion of the fees that Nirvana produces. Nirvana works the same way that Samsara does. When people trade, there's a fee. Some of it goes to the token holders. Some of it goes to the team to fund development, audits, live streams like this, keep the lights on. And some of it will go into raising the floor as just a direct investment into raising the floor. So rather than token holders collecting all of the fees, let's say 10% of them go into increasing the floor. Why 10%? Why not 12? I don't know. That's governed also. So with this change will come, in addition to the governance for Nirvana, where people are able to decide the split point between revenue that is paid directly to token holders and the amount of revenue left over that goes into the floor. This change is not a simple one, because it also involves updating governance, updating how fees are routed, making it so that the floor rises in a reasonable way as fees go into it. And the net result is going to be that there is a gradual increase in the floor price. With each and every fee that comes through, the floor can tick up a tiny, tiny, tiny amount. How much of a change this will have, again, is hard to predict. In general, the floor goes up much faster just from people buying ANA. If tomorrow, after our riveting live stream we're doing right now, people were like, you know what, this is the ultimate asset, we're going to buy $10 million of it, that'll make the floor go up quite a bit, much more than the fees would ever do. But if ANA were to crab walk, just trade sideways and spin on high volume as the bulls and bears are duking it out, the floor wouldn't rise from appreciation, but it would ratchet up as the fees trickle into it.
Mm-hmm.
I am excited about this. People understandably look at this buy wall of the floor and see it not going up and think that that's maybe a bearish signal or something. I don't personally follow that logic, but I'm sympathetic to it. And this would create a pressure that pushes the floor up, regardless of if the price moves or not. If somebody would just borrow, that doesn't move the price, but that generates a fee, and that fee goes into the floor.
Yeah. I think the psychological lift is the real thing here that I think is interesting. I mean, game theory, as you can imagine, is all really based around an expectation of future. And so when you bring something like the floor to life, in the absence of overwhelming demand, there's still life there, and it's just bubbling up. I mean, it's a fascinating concept, and it's been talked about a good amount, and it's certainly something that everyone is very excited about. So I appreciate you sharing the update on that.
And you know what? If they don't like it, they can govern it down to zero.
Yeah. I want all the revenue for myself. I mean, that's really what it'll be, right? It's like here's revenue, here's protocol fees, and they can go collectively to Prana stakers, or they can go collectively to the floor, which is helping Prana stakers, but also helping non-Prana holders. And maybe it's like preferred window dressing for anyone coming and looking at the protocol. It's going to make for a very hot governance debate each week, I'm sure. So looking forward to that. I got to do it because everyone's asking me this, and I said that I would ask you when is the latest? What's the latest when?
What's the latest when? Check out the demo. We could use some feedback and some volume on this. It matters to me that a launch goes off without a hitch, and I'm pretty proud that Nirvana's launch was without incident. Yeah. And for the most part, the app has been without incident, and I want the same level of quality for Samsara. And we put a lot of work into this UI to try to make it intuitive. We're collecting some feedback that I'd like more. I'd like more help testing this thing out, seeing how people respond to it, see if it's actually doing its job to make this system as simple as it really is. It's getting very close. The audits have come back. They've been boring. There hasn't been hardly anything in there,
Good
which
boring.
is a good sign. It's good boring. It's good,
boring.
It's good boring. I've been back and forth with them. Like, are you sure there's nothing there? And they are. So that's a helpful indicator that we're getting very close. It's down to a matter of weeks. Now it's down to getting the marketing push put together. Going to run a social campaign with another Temple of the Floor scenario where we coordinate with fake tokens. Let's stress test this thing. Everybody spend a bunch of fake bonk, drive this way up and crash it into the floor. And then away we go.
I love that. And just to be clear, you're talking about Samsara or Floor Sizzle with?
Oh, I was talking about Samsara.
Okay. Yeah. When Floor Sizzle. I'm saying that with my community member hat on. There's been a lot of that.
Yeah. I do believe it will be this month. It's quite a substantial change to the core logic of the program. It takes a lot of testing and auditing to get something like this done. There will be changes to governance that goes with it. Reasonably, it can be done in September.
Sweet. Yeah, and when you have 27 million in your reserves, you move slow.
I remember the last time we did the upgrade to the price curve, and God, I didn't sleep for 4 days getting that thing through one time.
I remember that day.
Yeah.
Sahand has a good question here, which I just looked. I was trying to find the sheet because we went through this as a team. He's asking, what are the governance numbers going to start at? And I don't think we have an exhaustive answer to that. The only one I remember directly offhand was 50 bips for buy selfie. I don't recall every value, but we have had that meeting internally with the team, and we did go through it. And I remember you asked everyone's input because you didn't want to be like, it's just, it was a lot of pressure for you if you're sitting alone to get it all right. So we collectively as a team came up with where we thought a good kind of middle ground starting point. If you have that and you want to shed some light, I think that's an interesting share.
Oh, yeah. I'm looking for that.
Yeah.
In
I didn't bookmark it. I have it in. It's probably in our G drive. But yeah.
Here's the point: is it doesn't really matter, and that's the beautiful thing about this. It'll start off at reasonable values, and there's a reasonable rate of change. And within a month or two, these numbers will vary wildly from where they were.
Yeah,
that's the point of this governance: is that it starts somewhere. It's always going to be wrong. No matter what you pick, you just lick your finger and stick it in the air and feel the wind and come up with a number. One of the reasons Nirvana governance works the way it does is because I don't want that anxiety of picking numbers, because it's always going to be the wrong number. So let the token holders nudge them up or down over time. Yep. I believe 50 bips buy sell does sound right. 100 bips for borrow does sound within the vicinity of what would be a good initial number. Yeah. And then you let them change 10% week on week, and you can shove them around pretty quickly. Yeah. Unlike Nirvana, the fee for exercising options in Samsara will be much higher. But again, the rate of change that governance can shove it around will also be higher. And so if people don't like it, they can push that fee down and make options cheaper to exercise. But I do just want to stress the design philosophy, which is unlike most projects you'll find in crypto, where parameters get set and then it takes months of arguing in a decentralized organization to come to some vote to move them discreetly. It just happens smoothly over time.
Yeah, I think the big takeaway for me on this is the 10% rate of change, which is about twice as fast as Nirvana, which I believe is also going to get that upgrade. So you're getting an approximate double in a value over 8 weeks and an approximate half in the value over 8 weeks. So within 2 months, and if you can double something every 2 months, that exponential change is sufficient, to say the least, especially with this many markets moving each independently. For anyone who's very gung-ho about governance, it's going to get overwhelming pretty quickly. And I think at the end of the day, people are just going to pick the markets they want to focus on and have to leave some by the wayside. You're not going to be able to, maybe you are. Somebody will come up with a third-party application for like quick movements on governance, and I look forward to that day. But when I try to imagine keeping close tabs on up to 100 markets and, over time more, like, it's going to be wild. It's going to be wild to be a prawn holder over the next 6, 12, 18, 24 months. Like, it's just going to be very interesting. And at 10% per week in change, I think you're right. Like, the idea is set it and let the market.
I think this is how crypto projects should work. I think this is one of the ambitions of dynamic decentralization. Let things move smoothly and let people vote with their feet, vote with their wallets, and make yourself resistant to large takeovers. Maybe people on the call remember a bit of Solana drama from a couple months ago, where somebody or some cabal of people thought that Solana emits too many tokens. They had a design where they were emitting tokens at whatever rate. It's very dilutive. And some people thought, we should change how this is done. It's a very dramatic change. Is a change to the paradigm for how Solana does its own dilution, its own, I don't mean this in a derogatory sense, but a bribe to the validators.
Yeah, it's expensive to run those. You want to make sure people are paid well. I don't remember that direct drama though, specifically.
Yeah.
I remember the headlines.
I'm in a nerdy echo chamber in Twitter. Anyway, you can imagine how it went. Just like huge arguments, everyone picking sides, and the vote is Boolean, and the motion passes or fails, and then it's very hard to get the political willpower to bring it up again. People end up leaving tired after that dramatic showdown. And that's just not how Nirvana does it. Every week there's a vote. Every week is low stakes. The numbers move a little bit, but that accumulates over time. And so people can come in and out of activity. If it went up one week, it might go down next week. It's not that this happens, once a year. Everybody get your coins together and vote on something. It's just always going on. It's a living organism. And that de-stresses what it's like to participate in governance, while also de-stressing what it's like to design these systems in the first place. You just set it at a rational initial condition and then let the people take the wheel forevermore.
Mm-hmm.
I like it. As I've said before, I think decentralization is measured by the alien abduction test, which is if the entire founding team were abducted by aliens, can the protocol still function? And Nirvana passes that test, and Samsara will also. And the changes that we're making to it just make us pass that test even better.
Love it. You showed us the front page before. I don't know how much, if we dove and spoke about enough. Do you want to just touch on sort of your thoughts behind it? It's beautiful. I haven't even really had a good look at it. I've seen a Figma screen cap. Take us through that. Maybe as a
let's think near term, long term. At near term, Samsara will be on Solana. It'll have a handful of high profile assets in order to focus attention. But the fact that this exchange bootstraps its own liquidity means there is no cost to list new assets on it. No real cost, no real monetary cost. There's
You
a
don't need
cost in
5% of my supply?
no. You don't need to like borrow money from some project's treasury to lend it to a market maker to get things going. You just list it and it starts.
No $1 million bonds for market
No
makers?
$1 million bonds.
Oh,
Can
God.
you believe it? As if this were crypto and not traditional finance.
It's a real thing, folks. $1 million bond. If price falls below this, you lose it. And guess what? They flush it on day 2. I've seen it twice in the last 2 years for projects that I've invested in. It's savage.
You were
Proud to be
telling me
part
the
of
story,
something
and I
else.
feel like my memory blocked it out because it seems so opprobrious. It was something like a let me say what I recall, and you can correct me. Like, I'm a
Mhm.
team, I have a token, I want it to be listed on Binance and Coinbase, and so a market maker says, "Yes, give us your token, we will list it, but we're holding inventory risk with this. We don't want the price to go down. So you also have to post a bond of $1 million. And if the price of the token drops beneath some threshold, then we're going to keep your bond because we're an unhappy market maker, holding this thing longer than we want to." And guess what? The price goes down and they keep the bond. And who pushed the price down? Probably the people who are holding all the inventory and can nudge the scales in one direction or the other. Do I have that about right?
Yeah, and I'm not going to name names just now. I feel like when I'm sitting in an armchair at age 60 and it's a tell-all, I'll write a book. But and I'm not even the top of the list of guys who could tell you about this stuff going on, but I know of one who at the very last minute, within 48 hours of their public sale, was approached by the exchange who had promised to list them and was told, "We will only list you if you give us $1 million bond. And if the value of your token drops below X, to protect our users," was the case. If the value of the token drops below X for 24 hours, then you will lose that bond. And of course the team had to surrender multiple percentages of their supply to this exchange as well. And within 2 days, the exchange liquidated the tokens that were sent to them, pushing the price below the bond value. And within 4 days of the listing, the bond was retired or scooped up. And guess what? 4 months later, they were delisted. This is the game that is played, not by every exchange and not to all tokens, but it's played, and it's pretty textbook at this point. I've talked to someone about that story, a few people, and they're like, "Oh yeah, that's just the game. That's how they make money. They've got their users that they're giving out some of those tokens to, and then they just rush to sell them, and then you lose your bond, and then you don't have volume on your market, and they delist you." So it's ugly. It's ugly. I'm not here to point fingers and name names at anyone in particular because that's not the nature of this chat. The nature of this chat is it can be done better. It can be done with more integrity, and it can be done in a more decentralized DeFi kind of way. And each one of these Zen token markets is going to just be bootstrapped. It starts at zero. There's no liquidity. When somebody decides that they would like this product, that they would like that asset, they come and buy it. And the token that they use to buy it becomes the liquidity. And over time, with demand, these things scale up. And the amount of revenue that gets distributed to all the stakeholders involved scales up as well. The pie grows. And so it's a brilliant, beautiful design. I appreciate you building it. And I'm excited to be on for the ride and able to talk about it and teach about it.
Yeah,
It's
it's
just a
kind of
better
like
way.
there is. I
That's what the
hate it.
whole point of this shit was. Just have a
I
better way to do finance. So finance kind of sucks. If you've ever been to a bank and tried to get a mortgage or tried to send a wire, like, it sucks. And crypto's done a great job of improving it. There's just a long way to go. And markets, and particularly the problems we're solving with this, is the next domino.
My first real job, how long ago? I don't know. In software, 12 years? I don't know. Yeah, was at a bank. I was building software for banks, and oh boy, I think this is why I got attracted to crypto. So I was hoping for a better system than what goes on there.
I always joke about that. Nothing makes me more bullish in crypto than going to the bank to try to send a wire. Seriously. Like every time, like maybe if I'm ever like murpy about the market, or, it's like summer doldrums, this case, not this summer, but like in April, I'm like, okay, you know what? I'm going to go to the bank and just send $100 wire just to feel something again. And you're standing in line and you get to the front and you give the teller 27 different line items to fill in. And then she types it out, she prints it out, she reads it back to you, tells you about the fee that's significant. And then in 2 days, the other bank may or may not receive it. And if they don't, good luck. It's wild. It's wild to me that people aren't already here doing international sends. And it's obviously booming and growing. And I think, stablecoin transfers versus the bank wire is probably the strongest case for like, this is the way we should be doing business, and it'll just happen. But yeah, if you ever feel bearish on crypto, go to your bank and try to send someone a wire internationally, even more fun. And then, so with that,
DATs have been on my mind because they give me the same ick, I guess you could say. That the fact that a DAT decides to buy some Bitcoin, or decides to sell it, or decides to issue equity, and that decision happens behind closed doors.
Well, look, hey, personally, I feel you, because there's probably something brewing there that someday we'll horizontally dilute, and we'll find out who's wearing clothes. But look, I love the idea that Wall Street is picking up our assets with their structure. I mean, that to me, that's a big win. It's a boom for our everything, what we're doing here. And there's a massive amount of liquidity outside of crypto right now that is slowly working its way in. And this is the vehicle they're choosing. I got no problem with that. But can we optimize on that too? Yep. I think the comparisons that have been drawn between Zen tokens and DATs is very interesting. It's not something I fully understand because I'm not a DAT specialist, but just to be clear, I think public companies soaking up large amounts of crypto assets is fantastic. That's not, but to your point, it is still opaque.
That's not what I'm referring to.
I just want to make sure I say that.
Yeah.
We like the DATs.
Sure. It's just what I was talking about was the arbitrariness of it, the shadiness of it. When does the equity get, diluted? You have no say and no way to predict it. How much are they going to buy? Michael Saylor issued a guidance statement about what the multiple of NAV has to be for them to buy more. That's cool. You're transparent. The only problem is he walked it back a matter of weeks later. These decisions are made by fiat. A DAT would be fine. It would be better if it did it in a crypto way, which is to say it just sets up the rules, it has algorithms, and it follows them, and it's transparent. And you're not going to get a January surprise when they issue 20 million more shares out of nowhere. You just get an email as a shareholder like, we're diluting supply 10%.
By the way, I get those a lot. I don't read them.
Yeah.
Honestly, I'm not even
nirvana. It's all governed. How much goes to the floor? It's governed. How many new shares? Well, that's just the market, people buying and selling. It's not by fiat.
Yeah. Yep. I'm full disclosure, I'm holding some micro strategies, but not a ton. And I bought a couple of the ETH ones, and then I was looking at it and I found ETHU, which is like the 2x ETF thing, so a little bit of leverage. And I was like, if ETH is going to go up, I think this thing captures more direct upside. I know people like to shit on these structured leverage products because you're getting a little bit of, you're not getting as pure leverage as if you just levered it up yourself. But as a lazy passive swing trader, I just chose to hold that instead of I got a little bit of Bitminer. Anyways. Side note, we're getting off topic, which means we've run out of our scripted things we wanted to talk about today. The final question I will ask is from Sahan. He says, when website reskin, which I believe is very soon. I know you were working head over heels on that thing a week ago and basically said, I just need a few more hours. Let's wrap with that. How's the reskin, the paint job coming on Nirvana?
Gosh, I wish I could share the new landing page. Oh my God, our marketing team are miracle workers with that. But I can't share it. Hopefully this time, 2 weeks from now, can show the landing page, and then at about that time too, the reskin of the Nirvana app, changing the colors from green and pink to the new warmer hues, which I think are quite beautiful.
Mhm.
That is well underway.
Beauty.
God, I'm looking at my calendar right now. Maybe this week, if I move some things around. It's just a chore to reskin everything, create a new theme, but it is coming. I care deeply about beauty and brand identity.
Yeah.
I also care about things like this floor investment.
Yeah, I know. There's a lot. There's a
Very
lot. Just to
soon.
be clear, guys, there's a lot on this man's plate. So I
We're
appreciate
refreshing the documentation also to be aligned with the colors. I just want this to be best in class. I want it to have the best first impression to everyone who sees it. Design is really forefront in how you can inspire trust and conviction in a project. And gosh,
Absolutely.
I'm just excited in some of the upgrades that are coming to the look and feel of everything.
Yeah, me too. And for everyone who keeps saying when, and I'm feeling impatient, I say, guys, nobody wants this more than us. So get in line. Now, last call to action for anybody watching this together: get into the DevNet and poke around, try to break it. If you do find a way to break it, please send us something in the DevNet feedback channel. The mods have been doing a fantastic job of relaying that feedback to us. It's getting added to this dev queue, and that's what you can do to help speed things and move things along. I've been playing with it every other day when I remember, and I just jump in there and try to break it. I haven't had a ton of luck, but I have noticed a few things that I forwarded off to our devs. In the meantime, we'll be back in 2 weeks to do another one of these shows. Same time, same place, all the rest. And I really look forward to that. We got a lot coming up this month that I think might surprise you, but we'll have to cross that bridge when we get to it.
Nice talking to you, RT.
Yeah, you too, brother. Thank you guys for joining us today, and we'll see you next time. Cheers.
Cheers.